Stock of the day, APE Eagers Automotive. Eagers says it's closely monitoring economic conditions, according to its Chief Executive Keith Thornton. The company expects considerable momentum in electric car sales. Right now, 12 locations are selling Build Your Dreams, which is the electric car area. Carl, what do you think of Eagers Automotive?
I don't mind them. They released their annual report today, so we're really talking about some of the statements made in that. So there wasn't so much of a sort of a market moving or news component in it. But looking at the business more broadly speaking, I think it's quite finely balanced at the moment. So look, BYD, no doubt, is going to have a big say in their growth going forward. So they've got the, they're not the distributors, that's the wrong way to put it, but they've partnered with the distributors to sell through AP Eagers showrooms. So at the moment, there's about 12 showrooms. There's 400 showrooms in total, so you can see the potential growth there. It seems to be quite popular. It's certainly at the moment, the BYDs, they're starting to sell quite a few of them now. Nowhere sort of Tesla numbers, but starting to build up. So, sold a few in January, sold a few more in February, sold quite a few more in March. So that's starting to look good. More broadly speaking, just in terms of their outlook, I think, again, as I said, finely balanced between, interest rates have gone up quite a bit, costs you a bit more to buy a car, finance a car. At the moment, we're cutting back on spending. Maybe we're going to make those existing cars we have now go a little bit further. Apart from that, their order book is still crazy strong. They're still cycling, obviously, the various supply issues with manufacturers, and look, I think it's kind of a zero growth proposition for the next few years, just as those two sides of things, EV versus slowing demand versus stronger order book, balance themselves out. In fact, if you look at the broker consensus according to Thomson Reuters, over the next 3 years, the compound annual growth rate is a donut, is 0%. You're paying at the moment. So no growth in this business for the next 3 years. And clients will say, hey, Carl, no growth, we shouldn't buy it, because my clients, they love growth stocks. I say, well, you can buy it if you can get it cheap enough. So we understand there's no growth because they had a huge pop after COVID, right? So flat growth is actually still pretty good for them. PEs at the moment is 12. It's not 25, it's not 30, it's not 40, okay? It's below the market average. I've gone fair value on my valuation. I've got 1350. You're getting a pretty good yield, about 5%. So I can go hold on the valuation. The chart is very strong, and that's certainly reinforcing this idea of holding. I could start to buy it again. It's not about what I think. I think, look, fair value a bit flat, but if the market likes it, that's all that matters to me. And if it starts to push above 1450, then I could upgrade it to an add. So again, putting a toe in the water, putting about a third of what you normally put into your share positions, more of a longer term view on this one.
Okay, Ben?
I think Carl's covered that very well. I mean, the only things it had the COVID boom. It also had a margin boom, and it was one of those kind of unprecedented times when car retailers weren't being pushed on their margins, and they were basically able to sell anything they wanted at a set price, and there was no bargaining, full stop. So it'd be interesting to see if those margins start to come under a bit of pressure, because it does make a big difference. AP Eagers also is a big property play. It's like one of these older school sort of businesses, property by stealth. So
they own all the car yards.
They own a lot of them,
right?
And that's how a lot of the famous car families, particularly in Sydney, have made so much of their wealth. It's not been through the cars; it's been through the rezoning events. So, if you know if you know Sydney very well, I don't know if the viewers, but Rushcutters Bay is always one I point out, which is, there used to be a lot of car showrooms down there, and then that got developed, commercial down the bottom, apartments on the top. So that's what AP Eagers has been really good at doing. So there's a big land bank there, which also helps underpin a valuation. I'd agree with Carl. I think I think he was getting to a hold there, and a slight add, and I think that's right. It's probably not quite cheap enough. The stock does move around quite a bit because Nick Politis owns such a large holding. It's actually very thinly traded once you strip out his ownership, and there'll probably be a time, I suspect, in the next 12 months you might be able to buy it a bit cheaper.
Okay, all right, but a hold at the moment. All right.